Paint is one of the fastest growing segment in India, and the major reason is increasing demand from the traditional whitewash to high quality paint categories like emulsions and enamels. This premiumization trend is expected to continue and provide stability and growth to the Indian paint industry. Over the past few years, paint companies have given great return. For example, Asian Paint has given almost 10 times return in the last 10 years. Hello guys, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Recently, Indigo Paint has opened up for the IPO. So in this video, we will do a quick analysis of Indigo Paints and see if it is worth applying for the IPO or not. We will first start with analyzing the paint sector in India and then we will discuss the company and its financials. Finally, we will discuss the IPO details and conclude the video with a yes or no for the IPO subscription. The decorative paint segment represents around 74% of the overall paint market in India and includes wall finishes for interior and exterior use, enamels, wood finishes and ancillary products such as primers and putties. From 2014 to 2019, the decorative segment has grown at a CAGR of 11.5%, driven by the increase in consumption of paints in Tier 2, 3 and 4 cities that accounts for nearly half the total sales. The Indian decorative paint market is expected to grow at a CAGR of around 13% in terms of value and 10.2% in terms of volume throughout 2024. The key player in the sector include Asian Paints, which is the leader, and other include Kansai Nerolac and Berger Paints. The major growth driver for increase in paint demand include growth in the housing and construction segment. In the longer run, the paint industry is expected to grow on the account of increase in disposable income, rising urbanization, rising rural economy, increasing trend of nuclear family, and increase in disposable income and improving lifestyles. Indigo Paint is engaged in the business of manufacturing paints and is the 5th largest company in the Indian decorative paint industry in terms of revenue for fiscal 2020. In terms of growth, it is the fastest growing paint company amongst the top 5 paint companies in India. Indigo Paints has achieved this position in a highly competitive Indian decorative paint industry. So basically, they introduced differentiated products to create a distinct market in the paint industry, building a brand equity for their primary consumer brand, creating an extensive distribution network, and installing tinting machine across their dealer network. Indigo Paint has a strong market network with dealers in Tier 1, Tier 2 and metro cities. It has 3 manufacturing facilities situated in Jodhpur, Kochi and Pudukkottai. If you look at the revenue growth of Indigo Paints, the revenues have grown from level of 4,031 crore in March 2018 to 6,264 crore by March 2020. Although the first 6 months performance is slightly on the lower side, mainly because of COVID. If you look at the profit growth, the profit has grown from 131 crore in March 2018 to 477 crore by March 2020. And if you look at the first 6 months of performance for FY21, it stood at 272 crore. Since 2018, its revenue have grown at a CAGR of 24.6% and profits have grown at a CAGR of 90.8%, which is simply amazing. Please note that we have ignored the September 20 numbers in CAGR calculation because it was an exception due to COVID. If you look at the return on equity and return on capital employed, both have increased to 33% and 26% by March 2020, which is great. However, due to COVID, both ROE and ROC have fallen down, which is due to an exception situation, and in future it is expected to grow again. Clearly, Indigo Paint is a highly profitable company. If you look at the debt to equity, it was well within control and the latest debt to equity is 0.09, which is almost negligible. Hence, overall considering the business of Indigo Paints, its competitive strength, its growth and its profitability, it looks like a fundamentally super strong company. Indigo Paints IPO opening date is 20th January 2021 and closing date is 22nd January 2021. Its issue price band is between Rs 1,488 to 1,490 per share. It is available at a lot of 10 shares. It means the minimum investment would be Rs 14,900. The current shareholding of promoters in Indigo Paint stood at 64% and after the IPO, it would be 54%. Now let's understand the reason for the IPO and what company would do with the money being raised. So the net proceed from the Indigo Paints IPO would be used to meet the capital expenditure requirement for the manufacturing facility expansion at Pudukkottai, Tamil Nadu, and to purchase tinting machine and gyro shakers. The money would also be used to repay certain borrowings and to meet the general corporate expenses. At a price band of Rs 1490, Indigo is priced at a PE of 149. The valuations are certainly on the higher side. But the major reason for high valuation is due to its strong and fast growing business along with a very bright future growth prospect. Now, the biggest question is whether it is worth investing in the IPO of the company or not. Well, you can consider investing in Indigo Paints for both short-term and long-term perspective. The reason for short-term is due to its higher price in grey market. Indigo Paints grey market premium stand at 55% at Rs 2,340, and considering the strong business of the company, it will receive very good response with multi-fold subscription. With this, it is expected that Indigo Paints would give a very good listing gain. For long-term investors, although the valuations are on the higher side, but looking at the bright growth prospect, you can consider investing in the company. Because of its strong fundamentals and solid performance with bright growth prospect, this is one company which can be accumulated more on correction. So in this video, we discussed about the IPO of Indigo Paints. If you like this video, give it a thumbs up and don't forget to subscribe to the channel.